Since the beginning of 2026, tribe traders and academy traders have been making a cumulative profit of over $2 million. All of this by just taking textbook higher time frame swing trades on, for example, LLY, United Health, Oracle, or AMD. My name is Phil. I've been swing trading since mid-2019, literally sharing my entire journey along the way from not even knowing what support and resistance are to now being the top video author on Tradingview and educating more than 35,000 swing traders on swing trading the higher time frame. Obviously, we still have a little more than 6 months left in 2026. And in order to make sure that our swing trading does not slow down at all, over the course of the next couple of minutes, I will give you a full breakdown of 4 textbook swing trades which we're also looking to take with academy traders and which could potentially make us another cumulative profit of over $2 million. With that being said, if you have absolutely no idea of my super simple swing trading strategy, I highly recommend you watch my previous YouTube video where I fully break down the exact steps I take before I can actually enter a swing trade. Now we just have to apply those steps to the charts. And the first setup which I definitely want to share with you and which is what I consider a textbook swing trading opportunity is the chart of Microsoft. As you know, we always start with a simple 3-step process, and we first of all start by identifying the underlying trend. Here on Microsoft you can see, for example, that all the way back in the year of 1989 literally until the year of 2000, so over the course of approximately 11 years, Microsoft created a quite parabolic bull run. I mean, if I just take out the measurement tool, you can see that from bottom to top, Microsoft has been rallying 17,000% before it then started creating a massive consolidation, and from the year 2000 until 2016, so more than 1.5 decades, you can see that Microsoft went from creating lower lows and lower highs to creating higher highs and higher lows, and simply has been creating this rounding bottom. After this rounding bottom, obviously Microsoft established a substantial uptrend, and therefore the underlying trend is still incredibly bullish. Next, we then have to take a look here at support and resistance, which is what I consider market structure. And specifically, if we take a look here at support and resistance, you can see that since the year of 2020, Microsoft has first of all been creating this lower green support trend line, and second of all, also been creating this upper red resistance trend line. This means that since the year of 2020, Microsoft has been trading in a clear rising channel formation, literally already giving us a lot of textbook swing trading opportunities along the way. Furthermore, you can see that as we are speaking, Microsoft is also retesting a significant horizontal level, which already all the way back in the year of 2021 was previous resistance. After the break towards the upside, it was turned support a first time. Now, as you can see, Microsoft is once again retesting this structure, so it's still acting as support a second time. And this simply means that as we are speaking, Microsoft is retesting a so-called confluence of support, which simply means that we have 2 independent support levels coming in at the exact same area, and this increases the probabilities of seeing a rejection away towards the upside. Over the course of June, you can see that Microsoft is down an incredible 16%, so we definitely have to wait for some bullish confirmation, but then we literally have everything pointing towards a significant move higher, and this is simply a textbook swing trade because it allows you to properly manage risk. Setup number 2, also a textbook swing trade, is the chart of PepsiCo. And here we once again have to start by identifying the underlying trend. Here on PepsiCo, you can see that already all the way back in the year of 1994, PepsiCo continued with its underlying uptrend by creating a simple break above previous resistance, which after the break towards the upside is simply turned support. We witnessed this bullish break and retest, and ever since you can see that PepsiCo has been trading in a quite strong uptrend. This specifically gets interesting when we now take a look here at support and resistance, because on PepsiCo you can see that since the year of 1998, so for almost 2 decades, you can see that PepsiCo, almost like on Microsoft, created this lower green support trend line and simultaneously also created this upper red resistance trend line. Literally since the year of 1998, you were able to catch every move on PepsiCo by simply buying at support and selling at resistance. Obviously, during the exact same period of time, you also had multiple bullish breaks and retests, starting with the first break and retest, which happened in the year of 2009, where PepsiCo was simply retesting another confluence of support before we saw this underlying bull run continuation towards the upside. We then witnessed another bullish break and retest back in the year of 2018, where PepsiCo created previous resistance in 2014, broke above this previous resistance in 2016, and came back to retest this structure in 2018, creating this very nice bullish break and retest, followed by this underlying trend continuation towards the upside. As we are speaking, you can see that PepsiCo is once again also pretty close to this lower green support trend line, and we are also witnessing a perfect break above previous resistance, which after a break towards the upside is simply turned support, meaning that as we're speaking, PepsiCo is once again creating this very nice confluence of support, which further increases the probabilities of now seeing a decent rejection away towards the upside. Before you now go ahead and full port PepsiCo call options, obviously you then have to wait for proper bullish confirmation on the smaller time frame, because then we once again have trend as well as structure as well as confirmation pointing towards a substantial move higher, and on PepsiCo you can once again perfectly manage risk. The third textbook swing trade which I want to share with you is a position on Meta. And here you can see, if we once again start by looking at the underlying trend, that on Meta all the way back in the year of 2012, so almost 1.5 decades ago, Meta created the previous all-time low. You were never able to buy Meta at that cheap prices, and you can see that ever since, Meta has been rallying approximately 4,000% and clearly establishing this underlying trend towards the upside. Therefore, we can already now take a look here at important structure on Meta, and when we're taking a look here at structure, you can see one very clear pattern. In fact, starting all the way back in the year of 2017, Meta first of all created this lower green support trend line, which was, by the way, also the reason for why in 2022, when nobody was talking about Meta actually making a recovery, this was a very simple yet very effective textbook swing trade. And you can see that over the course of the next couple of months, Meta created an immediate rally of 750% towards the upside. Simultaneously, you can also see that since 2017, Meta has been creating this upper red resistance trend line, meaning that Meta has been trading in this what we call reverse triangle formation. Quite unlikely that Meta will ever come back to retest this lower green support trend line, so we have to add some additional horizontal levels, and here you can see that around this $530 level, Meta created a previous all-time high in 2024. We already witnessed one bullish break and retest here in 2025, literally allowing you to capitalize on this 50% stock move towards the upside. If you add some leverage, you can easily double or even triple your money on this move. And as we're speaking, you can see that Meta is once again retesting this very strong support area, a textbook support area. And if Meta from here just drops another, for example, 9% towards the downside, and we then obviously still have to wait for bullish confirmation on the smaller time frame, then you can once again catch a textbook swing trade. You're properly able to manage risk on this one, and we once again have probabilities in our favor, since trend, structure, as well as confirmation are all pointing towards a major move higher. Last but not least, the final setup which I want to share with you is on MasterCard. And this has also been a stock which has been printing money ever since you were able to swing trade it. Now, already all the way back in the year of 2009, and we're still, as always, starting with the underlying trend, but already all the way back in the year of 2009, you can see that MasterCard simply came back to retest a substantial horizontal support, and you were already able to catch a textbook swing trade and literally printing since the year of 2011. You can see that MasterCard has been rallying approximately 4,000% towards the upside, and the underlying trend is obviously still much higher. Specifically also here, if we now take a look at structure, this is where things get very interesting. Just to give you an example of where you could have entered another swing trade back in the year of 2015, you can see that MasterCard once again broke above a previous all-time high, which after the break towards the upside was simply turned support. You were able to perfectly catch this bullish break and retest. And then just a couple of months later, with the COVID crash in 2020, you can see that MasterCard perfectly came back to retest a previous all-time high, created another textbook bullish break and retest, and you were once again able to catch a substantial rally just on the underlying stock of 70%. If you add some leverage, this could have been a 400% options position. As we are speaking, you can see that MasterCard is retesting a quite substantial lower green support trend line, which has been holding price since 2018. We can duplicate this support trend line, and this means that since 2018, MasterCard has been trading in this rising channel formation. And last but not least, you can also see that MasterCard is perfectly retesting a previous all-time high, which obviously after the break towards the upside, previous resistance is still just turned support. MasterCard is retesting a very nice confluence of support, which further increases the probabilities of now seeing a rejection away towards the upside. And in my opinion, it's just a matter of time until we will see new all-time highs. And just with the regular stock, you're already able to catch a rally of plus 30%. Before you now go ahead and jump all in with MasterCard call options, also here, we didn't witness bullish confirmation on the smaller time frame yet, but if we do, then we once again have trend structure and confirmation all pointing towards a move higher, and this is once again a textbook swing trading opportunity. By looking at those four charts, you can see that technical analysis itself is not that difficult, and obviously if you want to stay up to date with specifically those four positions, you can just go ahead and click the first link in the description, join my free trading tribe where I literally every single day publish a bunch of analysis. I'm going through everything, also in Phil's analysis, breaking down the exact swing trades, which we are also taking with Academy traders. If you have any questions regarding those four setups, you can also always just ask in the trader chat where I'm literally there almost 24/7 and helping you out with any analysis and swing trading opportunities. If you enjoyed this breakdown with textbook swing trades, which I'm also looking to take over the course of the next couple of months, I really appreciate if you smash the thumbs up below this video. I will see you in my trading tribe. It's 100% free. First link in the description where I will keep you up to date with everything. Until then, make sure you don't get caught up in any of the short-term volatility. You ignore all the noise along the way and you simply keep your long-term vision.